All right, everyone knows the AI revolution is in full swing, but the biggest opportunities? They might not be the big names you hear about every single day. Today, we're digging deeper. We're looking past the obvious players and focusing on the companies providing the picks and shovels for this incredible digital gold rush, the absolute foundation that the entire industry is being built on.
I love this quote because it nails it, right? It perfectly captures the massive scale of investment we're talking about. The demand for AI's digital oil, that's computing power and data storage, is creating a whole new economic landscape, and it's all built on data infrastructure.
So that's the billion-dollar question, isn't it? Instead of trying to bet on just one gold miner to strike it rich, we're going to focus on the companies that are supplying the tools to the entire industry. You know, it's a strategy that has paid off big time through every major tech boom in history.
Now, to make sense of all these opportunities, we're going to frame them as a risk ladder. We'll start on the very bottom rung with a really stable value play, and then we'll climb our way up through some high-growth engines all the way to a high-risk, high-reward contrarian bet. So, let's get started at the foundation.
Okay, first up on our ladder, the foundational value play. This is a company that is absolutely central to the AI data explosion, but it's one the market might have overlooked, at least for now. And that company is Western Digital, ticker WDC. Just think about it for a second. Every single large language model, every AI app you can think of, it needs a colossal, almost unimaginable amount of data to be trained and then stored. And Western Digital, they provide the essential hard disk drives and solid-state drives that make all of that possible.
And this is where the value part of the play really shines. Look at this. Western Digital trades at a PE ratio of just around 14. As you can see on the chart, that's practically half the price of the average tech stock. It's a huge discount for a company that is so critical to the entire AI ecosystem.
So let's talk numbers. What's the actual play here? Well, analysts are looking at an entry point in the low 70s, with a price target up there near $100. That suggests a potential 35% upside on what's considered a medium-risk stock. And there's a big catalyst on the horizon, a planned business split that could unlock even more value.
All right, moving up the ladder now, let's get into the high-growth engines. We're going to look at three very different companies that are cashing in on the explosive demand for the core components of AI, and each one has a totally different risk profile.
Next up is Vertiv, and they solve a huge problem that most people don't even think about: heat. A single rack of AI servers generates an incredible amount of it. It's a real challenge. And Vertiv provides the specialized, industrial-grade cooling solutions to keep those data centers from, well, melting. Their role is so critical that they have a direct partnership with NVIDIA to co-develop the next generation of data centers.
Because they're so essential, Vertiv is really seen as a core infrastructure bet. Analysts are pointing to a potential 24% upside from where it is now. Now that comes with a medium to high risk profile, which honestly just reflects how fast this stock has already climbed.
Okay, now for something really interesting. A fascinating small cap gem called InnoData, ticker INOD. If data centers are the oil fields, InnoData is providing the super high-octane rocket fuel. They supply the incredibly complex data engineering and annotation for 5 of the 7 Magnificent 7 tech giants. We're not talking about speculation here. These are active, major contracts. 79%. Just let that sink in for a second. That is a staggering number. But what in the world does it represent?
Well, that's 79%. That's InnoData's year-over-year revenue growth. I mean, that is just explosive. It's a massive signal that the demand for high-quality AI training data is going parabolic. And to prove the point, the company just smashed its earnings estimates by a whopping 82%.
You just don't see that kind of growth every day. It's incredibly rare. Analysts are seeing a potential 63% upside here. But, and this is a big but, that kind of reward doesn't come for free. Rapid growth like this brings a ton of volatility, which puts this stock firmly in our high-risk category.
All right, our next one is a pure momentum play. We're talking about GDS Holdings, basically the Equinox of China. It's riding 2 enormous waves at once. First, China's massive national push into AI. And second, its data sovereignty laws. Those laws basically require that any data generated in China has to be stored in China. creating a huge captive market for domestic players just like GDS.
Now, because it's a momentum trade, the stock has already had a massive run-up. So the bet here is pretty simple, that the momentum just keeps going. Analysts see a potential 62% upside. But let's be really clear here. Chasing this kind of performance is a very, very high-risk strategy. It's probably best suited for a small, speculative position, if anything.
Okay, for our last pick, we are taking a hard left turn. This one isn't about momentum or obvious growth. No, this is our Contrarian wildcard, a true high-risk, high-reward turnaround story that, frankly, the market has left for dead.
The company is Okta, a leader in identity management. And yeah, let's just get this out of the way. As you see here, the stock has been absolutely hammered. It's been beaten down by intense competition and a lot of concerns over its valuation. The chart? It's ugly.
So you're probably sitting there thinking, why on earth is this on the list? It's a fair question. Because the whole idea here isn't about what it's done in the past. It's about what could happen next when a stock is this heavily shorted.
Well, here's the contrarian idea. First, you have to remember that Okta is still a leader in a supercritical security space. Second, and this is the key, the stock has extremely high short interest. That just means a ton of investors are betting against it. Now, if any piece of good news hits, any at all, those investors could be forced to buy back their shares all at once, which can trigger something called a short squeeze that sends the price rocketing higher.
So this is absolutely a bet on a major turnaround. If that contrarian thesis plays out, analysts see a potential 29% upside. But I cannot stress this enough. As you can see, this is labeled very high risk for a reason. This kind of play really depends on a massive shift in how the market feels about the company.
Okay, let's pull all of this together. We haven't just built a single portfolio today. Instead, I want you to think of these 5 companies as a toolkit. Each one offers a completely different strategy for investing in the AI infrastructure boom.
This summary grid really lays it all out, right? You've got Western Digital as the classic value play, Vertiv as the essential infrastructure backbone, Innodata, the explosive growth story, GDS Holdings, a pure momentum trade, and of course Okta, the contrarian turnaround bet. Each one offers a unique risk profile and a totally different way to play the AI revolution.
So it all comes down to this. Which piece of this whole AI infrastructure puzzle, if any, fits your own investment strategy? The AI gold rush is definitely here, but the real durable wealth just might be in the picks and shovels. And remember, as always, this has been for informational purposes only. It is not financial advice. Please do your own research. Thanks for joining this explainer.